Well, good morning, everyone. I am Stephanie Giorgio. I am the events manager with the Mississauga Board of Trade. It is our great pleasure to have you join us this morning for our webinar on business acquisitions, a strategy that drives growth. I want to thank you. I want to give a big thank you to our sponsor, BDC, for hosting today's information webinar. Thank you very much for all your continued support. The Canadian mergers and acquisitions market has quickly rebounded following a dip during the first wave of the pandemic. Looking ahead, the volume of transactions will likely remain high for the next 5 years. In that time, 9% of Canadian small and medium-sized enterprises are expected to come up for sale externally, representing 116,000 businesses. After surveying more than 1,500 entrepreneurs, BDC found that acquisitions are exceptional driver of growth. Khurrum, Business Center Manager, Meadowvale with BDC, will discuss what factors are driving current trends in the M&A market. As well, he is an expert in recommendations on how to grow a business through acquisitions. For today, we will remain on mute. We are recording this event. We will have a Q&A session occur after our guest speaker presents today. If you have any questions, please put them into the chat box at the bottom of your screen, and I will moderate those questions right after our presentation. So if I can have all of you join me in welcoming Khurrum. He is the BDC Business Center Manager with Meadowvale BDC. So welcome, thank you.
Thank you, Stephanie, for such a nice introduction, and good morning, everyone. I hope everyone is feeling well and safe in this cold and snowy weather today. Today, we will talk about a very important phenomena which is happening in the Canadian business landscape, business transition. But before we move forward, I just want to request you all to excuse me if you hear a sudden banging on my door or hear some crying. It will be my youngest one trying to enter the room and take over the meeting. Guess what? This is the fun part of working from home. So please excuse me for that. I'm just understanding you up front. So before moving to our agenda, formal agenda, I would like to share the BDC mission with you first. Second. Yes. So this is BDC's mission: help create and develop Canadian businesses through financing, venture capital, and advisory services, with a focus on small and medium-sized enterprises. Today, I will give you an overview of the business acquisitions landscape in Canada. I'll share insights from our extensive research, and we will cover 4 areas today. The first will be how mergers and acquisitions is rebounding in this pandemic, in this COVID era. The second will be what will drive the thriving M&A market we forecast in coming years. Then we'll discuss how acquisitions are powering growth in small and medium-sized enterprises. And lastly, and most important, strategies for a successful acquisition. So first of all, I think we all must be wondering, how is the market doing right now, and why merger and acquisition is such a hot topic these days? So as you can see here in this slide, business acquisitions rebounded quickly following the early waves of the pandemic and remain at higher levels. The volume and value of Canadian merger and acquisitions under $100 billion rebounded quickly after the lockdown in second quarter of 2020, and the volume transaction still remain very high. This is a very interesting slide if you see here. Contrary to a widely held belief that Canadian entities are mostly bought out by foreign entities, the opposite is actually happening. If you can see here, Canadian enterprises bought twice as many foreign entities as the other way around. In fact, the dollar volume of outbound acquisitions were much higher than the inbound. So it's a welcome change, but a very, very new thing which is happening right now. Now we look into the sectors where we see most of the activities. So sectors obviously that did well during the pandemic are the ones we are seeing most of the activities. However, we are seeing merger and acquisition activities in almost all industries, especially in the manufacturing concerns. However, a couple of sectors, I will say, we are seeing notable activities, which are healthcare and technology. So if you can see on this slide, the healthcare sector, the transaction volume increased from 7% to 19% in just a matter of few years. When you see the technology side, 8% to 15% in just a matter of 4 years. So obviously you can relate these two sectors which are doing really good or have done really good in the COVID era, and especially when we talk about technology. Technology is very important, and you are going to see the demand of technology going forward increasing much higher pace. So what drives the merger and acquisition market? There are several factors, I will say. Sorry, I went ahead. Several factors which are driving the merger and acquisition market. So these include like demographics. So when you see read the demographics, you know the aging population, the aging of entrepreneurs, I will say. Some, because of this pandemic, some are rethinking their plans, whether they want to operate or sell their business. And then there's abundance of capital right now. Interest rates are very low. Valuations are very high. And there is a genuine demand of Canadian businesses out there. The two factors which were always there, but now they have become very important, which is driving this acquisition market. The first is acquiring the talent, and the second one is acquiring technology. So here you can see a very interesting thing, again, a very informative slide here. Canadian entrepreneurs are getting old, and you can see here they are much older than the Canadian workforce. So if you see here, 59% of Canadian entrepreneurs are 50 years or older, compared to 32% of Canadian workforce. This number is very high, or in fact, it's at 12% or over if we see entrepreneurs who are 65 years or older. The pandemic has made some to rethink their plans, further boosting the supply of businesses for sale. According to our calculations, before the pandemic, some 500,000 businesses were going to be changing hands over the next 5 years. No matter which side you are, buying or selling, you need to prepare. Maximize the value of your business for sale. Do your due diligence so you get the best value of your money. So this is a very busy slide, but I just wanted to share with you. And if you want, you can email it to me and I can share the slide or the presentation with you. But I wanted to share with you because you can see here the valuation multiples of different industries. So what I want to quickly touch base here is if you can see the valuation multiples, they have not declined significantly since the start of the pandemic. In fact, if you see in some sectors, multiples are now much higher, such as industrial goods and information technology. Private buyout investments have also rebounded. So interesting slide, and definitely I can share with you if you are interested to know more about the price multiples which are going through in this market right now. Abundance of capital. Low interest rates are expected to continue for next few years. I know this slide is a little dated, but it's still relevant. That's why I wanted to share with you all here. You all know we all were expecting that the rates are going to go up in Feb, and the Bank of Canada will increase the rates, but they didn't pull the trigger because of this Omicron. Going forward, we expect the rates are going to go up, but the demand and the excess liquidity in the market right now, it will keep the merger and acquisition market flourishing, and the demand will always be there. This is a very important slide, and if you can see here the difference between the labor, demand, and supply. So the labor shortage will persist and is likely to prompt more entrepreneurs to buy other businesses. The demand for labor is growing faster than the supply of workers, mostly because of demographics. The pandemic has aggravated these shortages. A drop in immigration will widen the supply-demand gap for next few years. The shortages are here to stay and will likely prompt more entrepreneurs to make acquisitions in acquiring talent. So you can see a big gap here. Even in 2021, a sudden increase in demand. And we all know, we are hearing from our businesses, entrepreneurs, you might all be witnessing this phenomena where there is a genuine shortage of labor. So it is going to continue. One way of acquiring this talent is acquisition, acquiring more your competitors and good companies which are out there up for sale. Another important thing is investment in technology, especially in e-commerce and increased efficiency, which has become a necessity to weather this pandemic. Almost 46% of the entrepreneurs say these investments are necessary to stay in business. But not all businesses have the financial resources to make these expensive tech investments because these are intangible. But buying a business can be another way of acquiring this technology. So very important phenomena, like I said in the beginning, technology, demand of technology, it's growing, and this COVID has further aggravated the situation. Wave of acquisition is coming up. 1 in 4 entrepreneurs, they want to sell or close their business in next 5 years. This proportion increases to 50% among entrepreneurs who are 65 or older. 9% of SMEs are expected to be sold externally. And when I say externally means it's not going to be a management buyout, it's or sold to a family member. These companies will come out in the market for sale. And I think Stephanie mentioned in the beginning, the number, if you see that number, that is 116,000 businesses across Canada in next 5 years. This is a huge number which is going to come in the market. Buying a business, we move to our third agenda, which is buying a business. Let me share the other slide. So acquiring a company is a compelling strategy for driving a company's growth. Entrepreneurs who grow their business through acquisitions are twice as likely to enjoy above average sales growth as those who grow organically. Acquisitions have many other benefits. We surveyed several entrepreneurs who have done acquisitions in the past 10 years. And this is the data we collected from them. And if you can see from this slide, 48%, almost half of the entrepreneurs, they witness increase in their profitability. 41% said their market share increased, and so on. So you can see from this slide, this is all our survey, and it shows that if acquisition is done correctly, it has many benefits. However, if you see here on this slide, only 13% of the entrepreneurs plan to use acquisition to grow their business. Nearly 1/3 of entrepreneurs plan to grow organically. The profile of entrepreneurs who want to grow through acquisitions, what we found out through our research, is more likely to have 20 or more employees or sales 2 million or higher. This is the research what we did, and we saw the entrepreneurs who are interested in acquisition. Our fourth agenda item is how to succeed a business acquisition. Acquiring a business can resolve many unexpected challenges. Developing a roadmap can help you succeed. This is another very busy slide, but I will say the most important one because it will tell you from the beginning to the end what is the roadmap and what's the acquisition steps you should be following for having a smooth takeover of companies or transition of buying and selling. So if you see, there are 4 steps mentioned here: preparation for business acquisition, initial and pre-sale negotiation, due diligence, and post-merger integration. So first is preparation. So what you need to do in this preparation step is consult with your trusted legal and financial advisor. You may also need to involve valuations, IT, HR, and marketing experts. The second step will be setting a clear objectives for the acquisitions. Help you define a plan of action and narrow down companies to consider. Creating an acquisition plan, which is the third part, lets you focus on strategic buying opportunities, outlines roles of your team, and set out a timeline and budget. And lastly, search for potential companies. To buy with the help, if you are using your network and advisor or contacts in the target sector, you can shortlist what companies you want to buy. So this is the preparation process where you are thinking of buying. So these are the steps you should be following. The next stage is initial and pre-sale negotiations. So once you shortlist some companies, find out why the seller is selling the business. Do your preliminary research on the business. This will help you in drafting the letter of intent, and also it will help you understand the business operations. The second step, the sixth step mentioned here, as you can see, is draft and negotiate a letter of intent. Terms should include price range initially, because there is no fixed price at that time. So a price range you can put in there, a seller commitment to provide all the records, whatever documents you need, you can list down in your initial letter of intent. Then comes the big part, which is begin to arrange financing. This will tell you how much you can invest. I will share an example, I think, later in my presentation, and you will understand how financing plays a very important part when you are looking for a merger and acquisition. So next is we go for due diligence and the purchase agreement. So if you see here in the due diligence process, this involves a review of legal, financial, and other areas of business. Hiring qualified professionals are advisable. Negotiate a purchase price. The final price is based on company's EBITDA and valuation and your due diligence. Do your due diligence is very advisable when you are buying a business. Do your complete research, compare the competitors, compare that, and you can find this information a lot of on Stats Canada. So do your research, because if you are buying a company without a proper guidance, without proper advice, without proper research, in the end, you are going to pay the price, because it will become a very troubling situation to handle this merger or acquisition you are planning to do. So do your due diligence upfront. The last process is negotiate a purchase price. The final price is based on company's EBITDA and valuation of your due diligence. And finalize the purchase agreement. This will include payment terms, any indemnification, warranties, and possibly an employment contract if the seller is staying on post-transaction. So last step is integrate your newly acquired business. It is important to create an action plan to help ensure a smooth transition, reassure and engage employees, maintain good communication about your plan and vision. So these are few, I will say 11 steps, which basically tells you from the day one when you start thinking about an idea of acquiring a company to the final stage, what you need to do. So this is a pro tip, we'll say. It's buyers may benefit from directly contacting the seller. So most sellers, what we see in most sellers, they prefer to talk directly with the potential buyers, but very few buyers communicate directly with potential sellers. It may be a good opportunity if for buyers if they do so. Secondly, then another thing what we found was a disconnect. Only 25% of sellers use electronic platforms to communicate their intentions. Meanwhile, 39% of buyers use these platforms to find buyers. So a big disconnect there, and it can work if we start using this platforms. If we start talking directly with the sellers, I think it can make our life easier and it will be very helpful. I want to share 4 extra tips for a successful acquisition from one of our top experts on acquisition, Itana Ruin. I hope I'm pronouncing the name correct, who is the managing director in our growth and transition capital. It starts with include the acquisition in your strategic plan. The most important and the most successful transactions are often based on a clear strategic plan to identify the right target of your objectives instead of making an opportunistic purchase. The second point is be dedicated to the acquisition. Acquiring and integrating a company takes time and dedication of the entrepreneur. Another point is implement the integration plan from day one. Start thinking about integration from the start. Keep assessing integration as you do your due diligence, so you have time to optimize a post-transaction structure. And lastly, and very important, plan for unpleasant surprises. Surprises are inevitable. A business transfer is almost always followed by a period of turbulence caused by the transaction. Now, these turbulence can be caused from within the business, like arrival of new managers or employees, change in employees' motivation, change in processes, or it can come from external sources such as loss of customers, loss of suppliers, change in competition, and things like that. Add to this, all is the uncertainty around the pandemic these days. Another very important and final point is don't underestimate the impact of remote work. This is very relevant in our present environment. Don't underestimate the impact of remote work on the culture of the company, especially in the integration phase after an acquisition. Thinking ahead of time about these contingencies will help a lot when unexpected happens. Integration issues primarily stem from the challenges of merging two companies, HR, business cultures, IT system management. Here are the first things that you should do during the first 100 days. So as you can see here, communicate. That shows how important this is. So communicate as early as possible and as often as you can. You may also want to set up a post-merger task force to help disseminate information and manage integration. The task force mandate would also include uncovering and evaluating and resolving post-merger problems. It would also act as a conduit from labor to management to communicate and resolve issues proactively. Another point you can see is identify and retain key employees. Very important. So you should form a committee for performance appraisals and personal files so that you can see the talent or who are the good employees and use them and connect them with the new management. Meet with key customers and suppliers, always very important. This could include meeting with key clients and suppliers personally or engaging.
This is now.
Sorry.
Sorry about that. I think Sonia just unmuted herself. I have muted
Okay.
her. Sorry, go on, continue.
See, that's the fun part of working from home. That's why I was mentioning in the beginning. So meeting with key suppliers, like I said, it's very important. At least we should send our letters thanking our customers and suppliers for their business, introducing the new management, and explaining your plans for the new entity. So very important things to do in the beginning. And then identify potential risk and issues. Ideally, you should have done this in the due diligence phase. And now it's just to fine tune or dive deeper and see if there is anything you want to address in short term. And lastly, build a common culture. Companies with different cultures find it difficult, if not often impossible, to make decisions quickly or to operate effectively together. Consider the strengths and weaknesses of each culture to try to retain the best talent in both existing cultures. So before I conclude my presentation, I want to share this example which will highlight the importance of liquidity and good financial package. So in our experience, an appropriate financing package is one of the winning conditions for a successful business transfer. And by success, I don't just mean closing the deal, but first and foremost, ensuring the business sustainability in the years following the transfer. Because afterwards, you have to be able to live with the financing. The more variables are there, the likely it will change. The more leeway must be provided for the financing package. And the pandemic is increasing the number of variables to take into account. Let's examine the two business cases here. So if you can see in the business A, the profile of business A is steady revenue, sell consumer goods, no seasonal fluctuation, a very diversified customer base, variety of clients in several mature industries, and it's an internal purchased by a CEO of a company who was operating the same business, and it was in the same business. If you see the company B or business B, it has variable revenues, manufacturer, large equipment, that sells when clients invest in capital assets. Contracts are often signed in the spring. Specialized, some big clients in industries subject to fluctuating commodity prices. And this is an external sale, like purchase by a third party, new managers to be hired. If both companies generate on average the same profitability, business A can afford greater leverage than business B. Business A can rely on recurring cash inflows to cover its fixed debt and recurring debt payments. Therefore, business A can use a large portion of its anticipated available funds to repay its debt because its cash inflows are more predictable. While if you see on business B will surely have unpredictable cash inflows and must expect significant variations from 1 month, quarter, or year to the next. Business B's financing package, because of this, must include more shareholders' equity. Business B must use debt instruments that will provide it more flexible repayment options, including longer maturities or repayment conditions on performances. So the key element is for the buyer to maintain a liquidity margin after the transaction. So that is one slide I want to share with you so that you can get an idea if it's a management buyout or if the company was sold externally, what is the difference, how financing is structured, and what should you be considering when you are reviewing a financial package for your merger or acquisition. To conclude my presentation from a macro perspective, I will say we are looking at the historical opportunity for consolidation and growth in Canada as thousands of companies will potentially change hands. The most important thing to remember from today's presentation is that there is a tremendous opportunity for entrepreneurs who are prepared to seize it. Buying another business is a viable growth strategy. The key to a successful business acquisition is good due diligence, excellent partners, plus financing package that takes into account all these uncertainties which we are facing right now. So this concludes my presentation. Thank you very much for attending today's webinar. We hope that the content we delivered today will be useful to you. I am happy to answer all your questions, but if we are short of time or if I'm not able to answer the question, please email it to me and I'll make sure I'll respond you back or I'll connect you with the relevant person. Thank you.
Thank you so much. So now we will open it up to questions. We do have some time. So I just put it into the chat. If you have any questions, you can put your question in the chat, or you can even, if you feel comfortable, if you want to unmute yourself, you can do as well. Just raise your hand and I can call upon you and unmute you, and you can ask your question. But we do have 2 questions in the chat, so we'll start with those. Why are we seeing an increase in M&A in the technology sector? And how is BDC supporting these acquisitions?
Very interesting question. I will say tech companies, like I said in the beginning, we are moving to, like everything is moving towards technology now. And with this pandemic, when you see COVID, one phenomena we all have witnessed is we all started doing online buying because the shops were closed, malls were closed. So we all started doing online shopping, online buying. So the demand for these technology companies have increased because of e-commerce. Now you want good website, you want good ERP system. So the companies who were smaller companies, I will say software companies who were developing these type of softwares, they demand for this new e-commerce thing started to grow. So they were seeing a lot of acquisitions coming up. And this demand will continue because we are moving in this direction where productivity, where technology is the need of the hour. The second question, how BDC is supporting it. So if I answer from the tech point of view, like if the question is just targeted towards the tech industry, we have a specific tech department who looks after companies who are managing this tech growth and merger and acquisition. But specifically, we have a separate department, which is a growth and transition capital, who support these type of mergers and acquisitions. We have different products. I'm not going to go in detail. I'm not a subject expert on that, but We can do cash flow financing, we can do mezzanine financing with different repayment terms like monthly payments or bullet payments. But we structured the program in such a way that that it's a winning condition for the buyer. They get a very good deal, and it's not just close of the transaction. Even after the transaction is closed, we help them during the transition, and for further growth, we lend them money and we provide them service. Another important thing, if I don't mention, it's not going to be just as is, we have a very strong advisory division. In fact, one of the biggest in Canada. So we have different advisory mandates that are solely targeted towards strategic acquisitions, or we have different platforms or mandates like for e-commerce, website, ERP implementation. So these are all a big help for merger and acquisition or companies operating in different industries.
Perfect. I hope that answers your question. If you need more information, please connect. I know that Khurrum has put his email address here for you. The next question is, what is the impact of real estate on acquisition of a smaller sized company? Some people recommend that the company not own real estate because the resulting valuation, including the real estate, would price the company beyond what many purchasers might be able to pay. On the other hand, it certainly does increase value.
So let me go through this again. Why are we seeing an increase in the tech? Sorry, Stephanie, I'm just going to read this again.
Sure, no problem.
What is the impact of real estate on an acquisition of a smaller size company? Some people recommend that the company not own real estate because so I hope if I understand the question correct. So acquisitions for a smaller company. So we are seeing a lot of transaction happening right now where the acquisition includes a real estate, and we have done transaction where it's just a purchase without the real estate. So if the question is, if it's the real estate included, is it beneficial? Yes, definitely. It increases the value because right now you are seeing that the market is growing, the real estate prices are increasing, and it's another way of building equity. So the buyers, when they are looking to buy a business, especially in this tight market where the inventory is very low, I think it's at a record low level. So they prefer to buy companies where the business is sound and the transaction includes real estate, because if they are buying a company, the intention is to grow the business. When you want to grow the business, you need some space. So if this new acquisition is coming with the real estate, this is always an added advantage. So in this special market, I think it's very important. But on the other way around, we have seen transactions, especially I will say in the tech sector, because they don't require that big warehouses or big office locations. So in those transactions, maybe just the business is a good way. If it's coming in, you will see a lot of demand for just the businesses, not the real estate. But if it's manufacturing, if it's a warehousing business, it's always beneficial if the transaction includes real estate and the business. I hope I answered your question.
Thank you. And Trevor, you let us know if that's good. We're good. If not, if you have a more specific question, if you want to unmute yourself, but if you're good, we can move on. Okay. So the next one is, sometimes integration takes time and market share profitability, have been achieved. What should be the timeline new management should consider to wait and implement plans to achieve a goal? What further steps should be implemented?
Very good question, I will say, and very relevant to this presentation. So if you see in my slide, I mentioned due diligence. So due diligence step is very important to answer all these questions, because when you're thinking of the company, those 11 steps what I mentioned was, when you start thinking about a company, or not a company, even I will say the acquisition idea, you start collecting all the information. That is the phase when you shortlist companies what you want to buy, because in this present M&A market right now, it's a lot of companies up for sale, but you want to buy a company which you really want to buy or which is in your strategic plan you want to buy. So it should not be like a one-off purchase. So take the example, if I give you an example, if you're looking to buy a swimming pool business. So swimming pool, they did really well during this pandemic because people were not traveling. They had the money, so they started building these pools in their backyards. But do you think this phenomena is going to continue in 2022 or 23? Chances are it's going to do good, but not that much. So you have to take into account these factors. Now, how much timeline it needs the business to turn around and start generating profitability? It depends on the industry what you're buying. And it also depends on the nature of this acquisition. Like I mentioned in my example, if it's just a management buyout where it's the company is bought by a CEO or managers, chances are the profitability will start generating that profitability very soon because they know the business operations, they know the competitors, they know their clients. So the transition time will not be that much. But if it's an external purchase and it's bought by a third party and who's going to bring their own managers, it will take time because you have to understand the culture of the business. You have to understand your suppliers. You have to build relationship with them. So it will take time. So the answer, if in short, is due diligence. When you are doing your due diligence at that time, think of these steps. If it's a management buyout, if it's external, if you are looking to buy a company, look into their financials, looking to their competitors, their operation model, and that will give you a good idea that when you can break even and when you can start generating profitability.
Great, thank you. So the next question is, are you seeing acquisitions of companies outside of Canada? Are you able to help with these opportunities as well?
So if I hope I'm explaining correctly, but if it's outside of US and if it includes a real estate and the company is going to be owned by a Canadian company, we can help. But if it's just a non-tangible purchase, I think we cannot. But send me this question and I will check it and I'll make sure I respond you back, because I just don't want to give you a wrong answer. So please send me this question and I'll make sure I respond you back.
Okay, that's from Rob. So Rob, if you want to just reach out and maybe get a further explanation, that would be great. The next question we have is, what is the difference between how BDC finances M&A transactions versus, say, the chartered banks?
Again, a very good question. I think BDC is a complementary lender. So that's the first thing. We work with the chartered banks. So if it's a big transaction, even in smaller transactions we have done where we worked with the chartered banks. So if you see the difference, you just talk about the difference. It's a difference in structuring the deal. So like all other transactions, what we do at BDC, merger and acquisition, we are also different in terms of what conditions and terms and conditions we offer. We offer a longer amortization. Like I mentioned, we have mezzanine financing where we can offer bullet payments. In terms of security, we go behind the chartered banks. So these are some of the differences what we offer. We are very flexible in terms of our package. So chartered banks, they are very, like in terms of pricing, in terms of packaging, line of credit, everything, they are also very strong. And that's why I said from the beginning, we work with the chartered bank because it's always good when it's a merger and acquisition and the client is coming to you, they expect a complete package. We at BDC, we don't do line of credit. We are only term lenders. So definitely there is a good chance of connecting with the chartered bank. So if you see just the difference, I will say we are more flexible. We stay with you even after the transaction is closed. We help you during the transition period. We help you in the growth. Security-wise, we stay behind the chartered banks. And if your merger and acquisition includes a real estate, we take high LTVs. We go up to 100% financing. So these are some of the benefits, how we differentiate ourselves from the chartered bank.
Perfect. Thank you. So the next question, there's multiple thoughts and a few questions here. I'll read it once and then maybe you want to look into each one and break it up a little bit. But multiples based on verticals seem to be stable year over year. Is BDC not seeing more risk aversion in the market on behalf of buyers? Is BDC seeing more earnout structure, M&A deals versus fixed price to mitigate any transitional risk that comes in the customer base, for example, in the acquisition?
Brian, if you don't mind, I will take this question back and I'll make sure someone from my growth transition capital connect with you. This is a little bit more relevant to my GTC department, but I'll make sure you get your reply as early as possible. Sorry that I'm not a very much subject. That's why we have a separate GTC department who looks after this. So I'll make sure you get your response back quickly.
Perfect, Brian. And did you want to say anything else, Brian? You can unmute yourself if you wanted to talk to this a bit more. If you have a different question and more of a relation. Yep, you're good. All right, perfect. Thank you. Awesome. So I'll leave it open. Those are all the questions that have been in the chat, and those have been great questions. I ask if anybody else would like to enter any other questions. You can unmute yourself. I can leave it open. We're good. All right. Did you want to say any closing remarks and in closing words?
Yes, I want to thank everyone. I think it's the merger and acquisition market right now. It's a very interesting market. Like I said, a lot of businesses are coming for sale. We are seeing a lot of transaction coming towards our way, and we are talking in the market with different accounting firms, and they all are seeing that the sudden growth in these transactions coming up. It's very interesting. So think strategically when you are buying your business. There will be a lot of opportunities coming up, but plan what you want to do. Strategic thinking is very important. Think that what acquisition is going to help you, do your due diligence, and it is a very good strategy to grow your business.
Perfect. Thank you. And I just want to say a big thank you for you joining us today. I think you've provided so much rich information for all of our members. So thank you very much. Thank you to BDC for sponsoring today and hosting this webinar. Again, we have recorded this webinar. It will be on our site in the coming days, so you can view it in full. If you need to connect with Khurrum, please do so. His email address is on the screen right now, and he will answer any questions that you do have. Join us in all of our upcoming events. You can take a look on our site at mbot.com/events. Good Morning Mississauga, all our upcoming webinars and our large events that are coming up as well in the spring, hopefully in person, so we can see each other in person one day soon. But for now, thank you very much for joining us. Have an excellent day. Thank you again for such a great presentation. And thank you to BDC. Take care, everyone. Enjoy your day today.